Hi, everyone. Thank you so much for joining us today. We have a very exciting panel. My name is Alissa Ostrove. I'm the Chief of Staff at CryptoCompare. We provide market data and are a UK-registered benchmark administrator. In the interest of time, we've got a lot to get through on a very important topic, consumer protection and market integrity. I'd like to invite each of our panelists to briefly introduce themselves, their firms, and what they do with respect to digital assets.
Thanks, Alissa. My name is Bobby Zagotta. I'm the CEO for the Americas for Bitstamp and also Global Chief Commercial Officer. Really excited to be here. Prior to Bitstamp, I was at another cryptocurrency exchange for 3 years as Chief Commercial Officer, and before that, CME Group, a large derivatives marketplace on the traditional finance side of things.
Hi, I'm the Chief FinTech Officer at the MAS, which is a central bank and regulator here.
Hi, my name is Deepak Khanna. I look after wealth and trading for Revolut in Singapore. So what does Revolut do? In simple terms, we are making a financial super app at a global scale, which means you don't have to have multiple apps, one for FX, one for remittance, one for cryptocurrency. Specifically in Singapore, we went live with cryptocurrency services in August this year, which means you can buy and sell them on our platform.
Thank you so much. Well, I'd like to kick off by defining this topic in a bit more detail. Consumer protection is obviously a bit of a catch-all term, particularly as it pertains to digital assets. So when we talk about consumer protection in crypto, what exactly are we trying to protect consumers from?
For me? Okay. Well, as a regulator, I think, those people out there, one thing they're completely not aware is somebody protecting the dreams being then sold there. I think that's a huge risk for us because we don't know the people who are interacting there do understand what consumer protection means. And I think that the challenge for retail investors especially has been last few months or a year now, that when the market went the other way around, there's a huge in requests and emails, and I get so many messages that this company has done something, this kind of promised something, do something about it. I think the consumer awareness is a big challenge for us now. I think we got to repeatedly and let the market know this asset class is not suitable for retail investors because they just don't understand. They're just betting on, you go around this whole booth, look at what the advertisement says. None of them do talk about the risk. They never talk about risk, that there's a risk in investing in this asset class, which is a sad part to this whole industry, because what the future holds for the industry is something we all think going to change a lot in a positive way. But the market influencers are not in the same direction. So our first focus has been definitely increase the consumer access to this asset class from a friction perspective. We have put a lot of restrictions around advertisements. We have put a lot of restrictions around the process by which they can access this asset class. Same time, from a broader regulatory standpoint, we are looking at 5 areas of risk. First, we are looking at, is this asset class will facilitate money laundering or terrorism financing? That's the first regulation which all of the crypto license players have to deal with. The second one is around, because it is a digital asset, there's a huge exposure to cyber risk and hacks. Last week we had a $160 million hack on a DeFi protocol, on a smart contract. Still that's going on, and all of this asset class getting stored in different contracts are exposed to those risks. The third element, the third element of risk is around what I call as expanding the friction with the investors here. We want to deliberately introduce friction because that forces investor to think twice before they invest in the asset class. The fourth one, we are looking at the market stability, the Luna Terra crash. It really got many regulators to look at large systemic collapse of people accessing such platform, and there's a need to look at those algorithms behind the stable coin, the asset which backs the stable coins, whether they're fiat or non-fiat, what's the right way to regulate them? Lastly, I think if market survives and continue to expand, there'll be larger financial stability related risk we are going to look at. I think that's broadly where consumer protection in some form and shape will come. But I think what people will feel more and more is that there's more friction to access this asset class.
Thank you so much. You touched on a lot of great points, which I'd like to deep dive into as we continue. I guess first I'd ask Deepak, Bobby, from the industry standpoint, do you have any views on what the end goal of consumer protection might look like?
I'll jump in. Thanks, Alissa. Yeah, I mean, as Sop mentioned, when people participate, they should have some reasonable assurance that they're dealing with something that has a level of trust and integrity to it. But there are a lot of challenges. So in many parts of the world, the first challenge is the regulations are not clear. And I have to commend SOP and the MAS for being a leading voice in this region with kind of more certainty and clarity than, for instance, in the US where I'm domiciled, where we have a lot of uncertainty and a lot of kind of competing regulatory agendas. So that's the first thing that we have to get right is we got to get the rules clear, because companies like Bitstamp, Revolut, others, we just want to do it right. We just want to make it safe and assured for all types of customers. But when the rules aren't clear, it can be a challenge. And then the other challenge I'll throw out is just the pace of innovation. As you all know, in this space, pound for pound, there's more innovation happening than any other area of technology or the world. So it's a tough challenge, I think, for regulators to jump on board that speeding train and match their rulemaking or their lawmaking, in the case of lawmaking bodies, to that pace of change.
Yeah, I think some great points here. From my perspective, which is Revolut being a crypto service provider, I can break it up into 3 or 4 parts when it comes to customer safeguards or protection. The first one is the entity a client is dealing with to avail crypto services. Is it regulated? Is it licensed? And if it is, there are chances that the risk management framework has certain minimum standards. The technology risk from fraud, anti-money laundering, as Sopnendu was saying, that has certain minimum standards from a regulatory perspective. And those are very important because in many countries, crypto services are not even regulated and people may be dealing with unregulated parties there. One example I can give is, like in Revolut, we don't put all the tokens on our platform. We do risk score them. Of course, this doesn't take away the due diligence an end customer has to put in, but that's a mitigation that we can bring in. The second is the token itself and the disclosures the token can bring in. The Terra case showed us that in terms of disclosure, in terms of the underlying reserves, those need to be worked upon, and that needs a regulatory support on that. The third area I would say is the market integrity. Are there rules from protecting from market abuse or manipulation? Lastly, I think is the customer himself or herself, their behavior, their knowledge. Crypto is a risky, volatile asset class. It may not be suitable for everyone. And how does the client get the knowledge if they want to get into this space?
Thank you so much. So I want to zoom into this point about sort of how regulation has evolved. Bitstamp has been running, I think, since 2011, the longest running crypto exchange. And you guys started at a period where there was literally no regulation. So I was wondering, Bobby, if you could comment on how you've evolved as the regulatory clarity within the industry has evolved.
Sure, thanks. So, we have been at this for a long time now, founded in 2011, but thankfully, this is a DNA level issue for Bitstamp. We've always been wanting to be on the forefront of this topic. And it's not just because we love working with regulators. It's because we're genuinely interested in broad adoption of this important technology. And in order for that to happen, it requires common sense regulation. So, I think a lot of our peers in the space drag their feet, complain, or avoid regulation. I would say to them, they're not serious about bringing this technology appropriately to the world and to society. So at Bitstamp, we've evolved by having that as our core value, I guess. And then secondly, and more directly, we've had to invest heavily in it, right? So today at Bitstamp, over a third of our employees, either directly or indirectly, are focused on regulatory compliance in the many jurisdictions that we operate in. It's a major investment. So another outcome we're interested in is a level playing field, right? Which doesn't exactly exist today.
I was looking at that ad. It says, future belongs to the fearless. That's exactly what we are worried about. That's exactly what is worried about, because consumers go there and look at that tagline, and it's a serious issue for us, because we got to ensure that there's certain discipline where you need to provide in this space so that consumers are not misled to build that I'm going to invest because I'm fearless. Well, that's a very, very wrong way to look at things. Just to respond to that, sometime, and this is, I think, the problem in the industry. If you go back to and I was speaking in the Milkens before, that the origin of Bitcoin was to solve a payment transfer problem. I can bet if you go around this room, very few people understand why Bitcoin was created. But they're not betting on that particular use case. They're betting on something else. So for us, we got to bring back the purpose of this coins, purpose of this asset class, because this tokenization of assets have something built under their own construct, a real asset. Now, if we are going in that new direction, and the future is Web 3.0, where the ownership of the asset is represented on a piece of token, let it be. But we got to ensure that the people who participate in this market do understand that there's a real asset behind these tokens. And the currencies which will be used to trade this asset also has to have some reliability. To me, there are these 4 asset class in the currency side: privately issued currencies, stable coins, central bank issued digital currencies, and is evolving now, commercial bank issued digital currency. If all we require a new form of money to buy this new asset class or new ownership of the asset class, then I think that's the market. That's where the market should go, and there's nothing wrong in that. What we don't want, that people should forget the very existence of the token and have this kind of tagline.
So from the MAS perspective, how do you find that happy medium between promoting innovation within this asset class, but also ensuring that the regulatory protections are in place to make sure that growth happens in a safe and regulated way?
We continue to put public experiments in this space. We have just announced like Project Guardian. We're looking at how to build a safe and sound protocols for the DeFi side. We have put some of our 3 years back. We put Project Ubin, which talks about the central bank digital currencies. We are also looking at use cases by which you can tokenize real economy assets. We have nothing wrong in that. We are going to push our resources, our support to the market where there's a real innovation, and I think that trend will continue. We'll continue to believe that there's a real need for market infrastructure, be it exchanges or be it wallet players or custody services, because these are essential market infrastructure. In a way, they will also come back to market integrity, because if you have an exchange which lists this token with the proper disclosure and high standard of listing, it helps the market to be much more trusted. If you have a very trusted custody services, it helps people to believe that these tokens are protected. So having this trusted market infrastructure would be also second layer of protection from our perspective as we support this new token-based economy. So I think these are some of these indicators which comes from regulators through projects, through regulatory directives, and through public consultation. You will see some more public consultation coming from MAS, which is looking out to the industry to tell us how you want to be regulated and what are the key issues you are dealing with. So there will be a bit of this partnership which will help us to move forward.
Thank you for that. As we've touched on, there are a lot of recent events that really touch on consumer protection issues, the collapse of Three Arrows Capital, Tornado Cash sanctions. I'd like to talk a little bit about what happened with Terra Luna and how we think we could approach stable coins. Obviously, leading regulators are saying that they're really requiring more urgent regulation than perhaps other areas. And I was wondering if any of the panelists had any comments there.
Yeah, I mean, if you look at the stable coins, in my mind, it forms about 15 to 20% of the overall cryptocurrency market capitalization. And that's a significant chunk per se. And they have a great use case in terms of remittance, low cost, quick remittance solutions can come in from there. So definitely there is a call for regulation there, be it in the form of the reserve requirements, be it in the form of, let's say, the disclosures, be it in the form of the spectrum that we see from Terra on one side and probably USDC on the other side. How do we sort of have a more synchronized across different countries? And of course, MAS is leading a lot of the space there. So more so in terms of regulation, but also standardization, because blockchain is decentralized and borderless, and it has to be across multiple countries, whatever regulation comes in.
Yeah, I totally agree. The only thing I would add is, stablecoins play such a unique role, to Deepak's point, and they create so much efficiency, or they reduce frictions in a lot of places. They've now become, just a huge market cap kind of part of the ecosystem, and for that reason alone, you need to have some assurance behind it, some regulation, so that people don't have to add another layer of risk on top of the risk that they're trying to get at to begin with.
I think the crisis did help us to look at this more closely. Of the three, out of the four digital currencies, I'm going to ignore the privately issued currency for now. Between stablecoin, central bank issued digital currency, and bank-backed digital currencies, definitely stablecoin has something meaningful to play, provided the underlying assets which they're backed improves the governance process there. I think there'll be a greater focus on governance around those asset class, the underlying assets. I know a lot of this large stablecoin are now doing almost daily disclosure of the assets they're holding. I know they're doing once in 2 weeks now. I've not checked it, but I think they're doing once every day now to show that how they're backed one-to-one. I think that's, and also the institutions which are going to custodize these assets are also a part of the critical play on the stablecoin side. So you will see more stringent governance around the underlying assets of the stablecoins. Is there going to be a play for algorithm-backed stablecoin? I think it's still extremely risky, and I think there'll be further governance questions around those algorithmic-backed stablecoin. But simple, easy to understand, well explained, good disclosure-based stablecoin do have a real use case, a real need to be operating this market, especially for low-value transfers. They're atomic, they're bearer assets. They can move money between countries easily. Of course, they'll be subjected to money laundering, terrorism, financing checks, and all those regulations. But they have some real stuff as against a privately issued Bitcoin or a cryptocurrencies. Stablecoins seem to have a path to succeed on a long run.
So I think one of the obvious challenges of consumer protection is differentiating between different types of consumers. We obviously have very sophisticated retail investors. We have those that are just entering digital asset markets, and we have institutional investors. I was wondering if you could touch on some recent comments that the MAS has made about restricting retail access to crypto and what those types of restrictions might look like.
Well, I will disagree with you. There's nothing called sophisticated customer when it comes to this space. Nobody really gets it. The only people are speculating a future value. So whether it is a normal retail customer or a highly specialized who understand risk investment, I don't think segmentation has really taken place in this market. It is still complex. Even the best player don't understand this market well. So I think at this point, I would not be segmenting them. We should talk about more foundational construct around regulation, disclosure, transparency, financial, even crypto literacy. I know a couple of CEOs were projecting that they should increase the amount of people should have awareness around this asset class. So once we get that right, I think we should be able to see a far more stable consumer participation in the market. We are not outrighting banning this piece because, as I said, we need a new form of money to transact in Web 3.0. That is a requirement because we must provide for that. And that new form of money, is it going to be a private issued currency or is it going to be some other? Is something system and the market will filter out. But we want to ensure that people should not divorce the projects from the coins. Moment they do it, they go into the speculation, and nobody really know what's happening to the projects. So, focusing on literacy, focusing on consumer awareness, irrespective of the segment of customer, will be our focus going forward. And it is going to be more and more stringent as you look forward, because if the market doesn't, thankfully the market itself is self-correcting, but I'm sure if the industry participants don't take their own responsibility to fix this, you'll see more regulators coming and increasing the consumer access to this asset class in terms of adding more friction. So I would strongly urge the industry to also step up by their own merit to bring more discipline to the market.
Deepak or Bobby, would you like to comment on how you differentiate between retail or institutional investors on your platforms?
I think let's go with the fact that it's a homogeneous target audience right now. But I want to touch upon the financial literacy that Sopnendu spoke about, and I'm glad you did that. We are in the business of making world-class financial products and services, and we feel that literacy is very important there. I'll give an example that Revolut has 20 million individual customers on its mobile app at this point of time globally. And by talking to many of them, we realize that there is a need for education when it comes to cryptocurrency and blockchain. And this is 101 stuff. At the back of it, we created short courses, which is on the app. And these courses are, like I said, short. They got videos, quizzes. Within the very first month of launch, we had 1 million customers who went through these courses within the very first month. So that shows the level of interest the client have to educate themselves. Of course, this is just a foundational step. There has to be many more things to sort of protect on that front.
Yeah, just to add to that, it's interesting. On the one hand, we segment very, very finely because different types of customers have different needs that we're trying to meet. However, they're all equal in terms of having to pass verification and KYC and AML tests before, regardless of whether they're an institution, they're sophisticated, they're brand new to this space, they all have to play by the rules. They all have to go through our pretty rigorous verifications. And again, we operate in 150 or so countries, so we've become very good at it. And that's the cornerstone, I think, for making sure that the people that get in have an honorable purpose and a real objective.
Deepak, you touched on an important point in the role of education and how education ties into really ensuring that consumers can make educated investment decisions. I was wondering if Soap or Bobby would like to comment on what roles you take to empower customers or investors to make sound decisions as they're approaching digital assets.
Sure, I'll jump in. So firstly, this is one of my favorite topics. We recently did a pretty extensive survey called the Crypto Pulse Survey, 30,000 respondents globally, institutions and individuals. And we asked a lot of questions about trust and about how people from different walks of life view cryptocurrencies and approach cryptocurrencies in general. We learned a great many things, but just a couple that are relevant. One is that in general, the more people purport to know about cryptocurrency, the more they trust it, self-reported via this survey. And that's not true of many technologies. If you think about social media or AI or other things, it's usually the inverse. And then secondly, we learned that a great many people are interested in participating, but they don't know where to start. About 44% of respondents globally said they would like to participate. They don't know where to start, literally. So there's a significant knowledge gap that we have to cross, such as with programs like Deepak mentioned. And on Bitstamp, we've just launched a Learn Center with exactly that objective in mind. It's designed to provide information that meets you where you are in your crypto journey, whether you're just curious or whether you're a sophisticated participant trying to keep up with market trends. And the trick is not just to serve up information. There's a ton of information out there, but to serve up information that you stand behind as a trusted provider and that is digestible. It can't be, has to be digestible, bite-sized chunks that people can put to use.
Other than the literacy program, I forgot to mention there's one ecosystem which Singapore is focusing on is to build a risk management capability, starting from cybersecurity, chain analysts, those companies which looks at fraudulent transactions, and also protecting a lot of this asset through a better custody services. So I think there's a need to also build an external ecosystem which surrounds this industry from a consumer, when I just saw that it says crypto recovery services, which looks like you got to call somebody if something getting hacked. So these are the, I don't know what they do there, but these are the examples of how you build a larger ecosystem along with the literacy program, so that you know what to do during challenging time. You got to know this asset class very well. I think people have to understand that you cannot separate a crypto asset from the underlying purpose. Moment you separate that, you are bound to speculative behavior, and I think that's dangerous. And I have got so many complaints. Doesn't matter what the background is. Once things go wrong, they want us to take action. I think you got to make a qualified decision of when you indulge in this particular asset. So hopefully we get there with better awareness, more proactive regulatory intervention in this space, and sometimes friction is good. A lot of people say, why are you adding more friction? Of course, it's good because it forces you to think twice before you get into some business. So I hope this will help us to go forward in a much stronger way.
I mean, if I can just add to that, empowering can come by financial literacy and education. Empowering can come by some of the risk management tools, and some of them we are also deploying. But empowering can also come by breaking the barriers. On our Revolut platform, if you want to trade in stocks or cryptocurrency, the amount required is $1, in some cases less than that. That helps client to reduce any exposure they normally would have had by making sure the barriers to entry are low. So there could be many more things to empower a customer on that space.
And especially when moving money on these rails, there are low value transfers, which definitely this is a better alternate to go through this. And I think let's not destroy the value of this market by overhyping or over speculating and putting messages out there which will not serve the industry for long. So I hope, as I walk around today after this, I'm going to take picture of those companies which are advertising this not appropriately. So I will see how many of them make the list.
Yeah, if I could just agree with Sop, again, Bitstamp, longest running cryptocurrency exchange, we started in 2011, so we've seen cycles. But I must confess, in 2021, when I saw Super Bowl ads and such an incredible hype cycle going on, it did not make me feel good as a crypto committed person. I felt like the hype was eclipsing the real story, and I hope that this market correction helps us kind of.
And even the conference organized like this one should also have some standard of what you're showing to your client here. You cannot create, just because you're doing a conference, you cannot promote bad behavior.
Absolutely. It certainly seems that knowledge is power. I'm kind of missing the live llamas that we had wandering around the last London TOKEN2049, but we just have a couple of minutes left here. I'd like to ask each of our panelists briefly. Obviously, the name of the conference is TOKEN2049. I'd love to know what you guys think we'll be talking about this time next year and also in 2049. If you could keep your answers just to 30 seconds or less.
I mean, hopefully all that we're speaking this year, we don't have to speak again next year, and we have progress further from that. For 2049, I can't crystal gaze there, but I'll say that any technology which has a paradigm shift may not seem very useful in the beginning. That happens with the home computing in the 70s. It may look very risky, like the internet of the 90s, but look where they are today. I hope that in 2049, blockchain, digital assets as a bigger ecosystem, we can talk about it in the same breath as home computing and internet.
My hope that from next year, you will see less about currency, more about assets. More assets, more token representing real economy assets should be the way forward. I hope to see much of the construct of the design of the booth does change next year with much more serious token player, less speculation.
And in 2049?
Well, by token 2049, you'll be a winner of which digital currency is going to finally win this battle of exchanging the new asset class. And I hope that there'll be 2-3 good alternate for us, which are less speculative, real currencies.
Yeah, I think a year from now, and maybe this is similar to what Sop was saying, it's use cases. So, I think we're talking about concrete use cases that add value to people's lives and to society. And And that's the driving force. And that's exciting. That's happening, by the way, but not many people are talking about it yet. So, and then in 2049, perhaps a history lesson on something that was once referred to as fiat currency.
I use the word new form of money.
Well, I think we're just about out of time here, but thank you so much to our phenomenal panelists. Thank you all for joining us today.